welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary, and this show is all about your stock-related queries. So write to us on any of our social media channels or the YouTube live chat or on the WhatsApp number that will be on your screen. Any long-term queries or short-term strategies, do tell us and we'll get your questions answered by a fundamental and technical guest. But before we do that, let's dive into, before we dive into the questions, let's look at where the markets are currently at. You have the Nifty 50 trading in a very tight range today, almost about 100 points. And it's only about 0.1% up right now, but in the positive. You can see that low in the morning trade, but we've come up since then, so above the low point of the day clearly. But you look at some of the constituents of the Nifty 50 as well and see what's pulling the index higher. You have something like an RIL that's contributing about 22 points to the Nifty. You have Infosys, HUL, ITC all in the green. On the other hand, you have banks like ICICI Bank, SBI and HDFC Bank all in the red today. And even Axis Bank. So all the banks that are not doing too well clearly. And let's also look at some other sectors that are trading in red today. You have the auto as well, that's down about 0.2% or thereabouts. You have metals in the red today. We saw a rally in metals in the last 2 days or so, and it's down about 0.7%. So clearly some profit booking happening there. You have the PSU Bank index also down about 0.5%. On the other hand, you have realty doing very well in trade today, up about over 1%. FMCG up about 1.5%. So a good day for FMCG. As well. You have the energy index up about 0.6% as well. Let's also look at the broader end of the spectrum now. You have the mid-cap index, if we can pull that up and see, yeah, it's up about 0.2%. So doing better than the benchmarks for sure. Let's also look at the small cap that's down about down 0.16%. So in the red today. However, positivity on the mid-cap space definitely. Let's look at some of the counters that are moving. You have Piccadilly Agro that's up about 5%. On the upper circuit right now, you have Apollo Tyres as well. That's up about 1% after a bulk trade. You have BHEL that's down about 4.5% right now, and we'll talk a little bit about that in detail in just a second. You have Dollar Industries also down about 5.2%, while Dollar Industries did well on most of the counts. There was net profit that's been that's the area of concern, and that's what the market is taking cues from as well. You have something like a PNC Infratech. If you can pull that up, that's gaining in trade. It's up about 12% up. Now this comes on the back of an announcement that happened only a couple of minutes ago. It emerged as the lowest bidder for 2 road projects worth about 5,000 crores from Maharashtra State Development Corporation. We're seeing that impact play out in the stock. You have something like a Hitachi Energy also down about 2% on the back of fourth quarter results. But let me circle back to BHEL, which is also the focus for today, and I'm joined by my colleague Mihika to tell us about how the numbers were for the fourth quarter and what's the management commentary, what's the outlook like for the company.
Yes, so the Q4 earnings were disappointing ones. Revenue was marginally up 0.4%. The key number was the EBITDA, which was down 30.6%, and this was mainly due to higher other expenses that stood at 527 crores versus 58 crores a year ago. Margins contracted 400 basis points, and net profit fell 25.6%. When you talk about the con call highlights, now the order book of the company stands at 1.31 lakh crores, and around 92,000 crores of these orders were from the power sector and rest from the industrial sector. Now, gross margins were down due to supply chain issues and execution delays, according to the company, but they are targeting a 12 to 15% CAGR growth in terms of revenue. And they also mentioned that the government is planning to add 88 gigawatts of power by 2032, and the company is expecting 10 to 12 gigawatts orders from there. When you talk about the brokerages, a mixed bag. Now we have Morgan Stanley, which is retail and equal weight rating at a target of 220 rupees, which is a 31% downside. Q4 FY24 revenues and margins were below their estimates, but they do expect order momentum to continue given the policymaker focus on adding thermal capacity. They do believe that earnings visibility is improving with healthy prospect pipeline. We have Nuvama, which has retained a buy at a target of 400 rupees, which implies a 25% upside. They've mentioned healthy outlook given a 25 gigawatt of thermal total addressable market spread over the next 2-3 years. They've also implied that the old legacy projects expected to be completed by FY25 end. And lastly, they've estimated an EPS CAGR of 88% over FY25 and FY27.
All right, thank you, Mihika, for that. On that note, let me introduce you to the guests for today. We have Lancelot Tikuna, CIO, ValueX Wealth Connect, joining in along with Vaishali Parekh from Prabhudas Leeladhar. Thank you so much for joining in today. Lancelot, I'm going to come to you first on BHEL. You saw the management commentary as well, and there is some concern around the execution of orders. And even though there is this positive outlook that the government is going to continue putting in money into the space, but the execution part of it seems like a concern, and especially with a long gestation period, right? What's your long-term view on something like a BHEL?
So I think, whenever you look at the future of the company and its growth prospects, you also have to look at what is the price that you're investing in that company. And if you consider that valuations, while there will be earnings growth going forward, it is trading at a very high multiple at this point in time. So unless the profitability can significantly improve, it's very difficult to justify, investment at a high multiple as it is at this point in time. So yes, there is no doubt that the company is going to get further orders. Execution capabilities may improve a bit. There has been some short-term disappointment on that front. The question is that, if the valuation is high, is this, it's better to wait out and, wait for a significant correction in the price before the valuations. When the valuations become attractive, then one can look at investing in the stock.
Fair point. Let's dive into the queries now. The first one is from Suresh from Kerala. They're talking about the counter KEI Industries. Vaishali, I'm going to come to you on this one. They bought the counter at a price of 3,890 rupees. It's currently trading well above 4,100 rupees. Vaishali, this has been a doubler in the last 1 year. Do you see more upside from here? And the question is, should you add more?
Well, I would say that yes, it has a very strong uptrend and it has moved one way. So if one needs to add, I think in all likelihood, the way stock is going on, even on the monthly chart and all I'm looking, I think it's ready for a target of 4,600 and so on. But I would say, one needs to be cautious at these levels. 4,000 should be the support and buy near the support.
All right, fair point. The next question is from Mohandas on Crompton. They say they have bought the shares at a price of 392 rupees, so slightly above where it's currently trading at. And so we saw the earnings come out in the last couple of days as well. What's the long-term view on this counter?
I think the long-term view is definitely the counter should see much better growth going forward. And, being in the power industry, you do get some benefits of the electrical side of business growing. And, we will see some growth coming in. But again, valuations are a little expensive. The stocks have moved up, in the near term. So one needs to be a little careful when buying into the stock. And because if you buy it at a high valuation, your returns obviously cannot be that high. So I think at this point in time, it's better to wait for a correction and then look at entering the stock if one wants to add this to the portfolio.
All right, fair point. The next counter is Vedanta. This one's from Subodh, who's writing in from Delhi. They say they bought the counter from a longer term perspective at a price of 322, so quite a considerable profit there. They want to know if they should hold on to the counter or should they maybe book some profits. Lancelot, Vedanta has seen a bit of a turnaround on some parts of the business, right? What's working for something like a Vedanta? Is it the metals rally that's helping it, or it's the company as well that's in terms of longer term outlook?
So I think the metals rally is definitely helping, the outlook becoming a lot better with, metal prices going up and capacities becoming limited in terms of global production. You will see probably better prices going forward. However, in all the commodity stocks, these commodities are cyclical by nature. So at this point in time, you're having less capacities and more demand. Prices are moving up, and that is aiding the share price value. But one will also see at some point in time when these prices peak out, and then capacity addition comes in, and that will then bring down prices. So in commodity stocks, it's always better to invest when you're at the lower end of the commodity cycle and look at booking profits when you're at the higher end of the cycle.
All right, let's take a technical check on this one. Vaishali, what are the key levels you should watch out for in Vedanta? Would you suggest somebody who's sitting on a considerable amount of profit to maybe take some money off the table?
I would say so, because it's really given us a run up right from 260 levels to 500. So I would say yes. The stock can show some exhaustion at these levels. It's better to book some partial profit and look for lower levels again to get into the stock. For now, it can see some profit.
Okay. Next counter is Biocon. This one's from Ramesh, who says they've bought the counter at a price of 330 rupees, slightly elevated levels from where it's currently trading at. From a longer term perspective, I think the holding period here, Lancelot, is 1 year. From a 1 year perspective, should you continue holding on to something like a Biocon?
So I would look at it this way, that, there are a lot of alternative stocks where, which one can invest in. Where the upside is clearly more visible than it is with Biocon, because Biocon last year, sold off its major portion of the business in the biologics business, and now is focused only on the biosimilars, and that is a very slow process in terms of the overseas growth. So returns are going to be a lot muted going forward, and it's going to take a longer period for a recovery. So given that as a background, one should look at maybe either exiting at some point in time and moving into some of the other pharma companies where you can see sustained growth outlook, and the valuations are equally reasonable. So one can look at the other alternatives.
What alternatives would you suggest?
So one can look at, for example, you had Lupin came out with good numbers as well as good expectations about growth in the future from the US markets. So those, companies like that will see where their primary, let's say, market is on the export side, and you are seeing demand picking up from the West. So that these companies would generate higher profits in the near term as compared to Biocon, which will take a much longer period to generate similar profit growth.
Fair point. So switch from a Biocon is what Lancelot is suggesting. The next counter is HDFC Life. This is from Shamik from Kolkata. They say they bought the counter at 610 rupees. It's well below that price. Is it time to sell, Vaishali, is the question. Maybe you should get out of the stock, or should you continue holding on to it? And do tell us if you have a target on this counter as well.
Well, I would say that it's now that he has held on for so long, continue holding, because it is definitely showing signs of reversal. So if 530 levels break, then that damages the trend further on. So that is the time that one should exit. But however, right now, I would say that yes, perhaps take a chance, adding more, so that there is a bounce coming up to 600, 620. So that could lower his cost and help him get out.
All right. It's time to slip into a short break, but we'll be back and we'll take more questions on the other side. Stay tuned. Welcome back. You're tuned into Ask Profit. Let's dive into the queries again. And this one's on Vari Technology. This is from Shimon from Kerala. They want to know if it is advisable to buy this counter. Lancelot, this counter is down 5% as we speak. It seems to be in a bit of a downtrend actually. You look at the last 1 month's returns and it's negative. It's down 25%. Do you think this is an opportunity to buy, or would you maybe pick some other counter within the space?
So I would look at another counter, because this stock has fundamentally a lot of further downside to go because of the high valuations that we are seeing. And it is becoming very difficult to justify these kind of high valuations, and hence when the market sells off or the stock sells off, you start to see this kind of falls. So it is always better to buy a good company at a reasonable price. And in the IT space, a lot of companies have been hit, in terms of because the sentiment for the space has been negative. Valuations have come off in a lot of good companies. So whether it is something like a L&T Technologies, or even your TCS, Infosys, you've seen valuations come off considerably. So it's much better alternative to buy into those companies where your valuation is low, the downside is limited, and you could see significant upside when the entire sentiment improves.
Right. The next counter is Devyani International. This one's from Mamta Chawla, who's writing in from Delhi. They say they bought the counter at a price of 175 rupees, Vaishali, above what it's currently trading at. For somebody who's sitting on a loss, and this counter also seems to be in a bit of a downtrend. You look at the 6 months returns, and it's about 15% down or thereabouts. Would you suggest holding on to it, or maybe get out of the counter?
I would suggest can get out, or perhaps because this has made a couple of times taken support at 145 levels. So wait for a bit of a bounce, if not in a hurry. 180 can be a bounce back, but I would definitely ask to get into better stocks.
Okay. The next counter we're talking about is REC. Now, this one's from Vishwajit, who's writing in from West Bengal. They say they bought the counter at a price of 111 rupees. Lancelot, considerable profit for somebody who's bought it from at 111 rupees for something like an REC. Would you suggest maybe taking some money off the table, or do you see more steam left in the longer run?
So you see, REC is in the financing business, and it is basically financing rural electrification. Yes, the government has a big thrust into the space and is provided, and that broadens the opportunity that they have. But at the same time, it is a financing company, and what they will earn is going to be the spread that they generate based on the investments that they are making. So considering that, I think, we are going to see spreads narrow down and going forward, and even valuations then become a little high. So one should really take profit off the table especially when you've made so much money.
All right, fair point. Lancelot, another question, and this is we've got multiple questions on this counter on Hindustan Zinc. There is a rally, and what a phenomenal rally you're seeing in this counter. We have somebody who bought it at a price of 422, and that's Vishal, and we have another one, Mr. Hariom, who has also bought the counter at 319 rupees. For people who have been holding on to this counter, and you look at the last couple of days, this counter has been, right now as well, it's up 6%. Do you see more steam left, or that this sentiment kind of maybe fading away considering the valuations of the counter?
I think valuations, if you look at the last 2 months, valuations have, the stock has almost doubled in the last 2 months. So valuations have, gone up significantly. So I think one should be cautious when investing, at high valuations, because while the markets may look attractive going forward, especially for metals, you can always see that at some point in time, these metal stocks will begin to correct. And at that time, companies that are highly valued will see a much larger correction. So I would actually stay away from, buying into at a very high valuation. If one has booked profits, one can, look at cashing out some part of the profits.
Vaishali, do tell us the key levels for Hindustan Zinc as well. What a rally! Should you maybe hold on and wait to sell, or is it a good time to maybe take some money off the table?
I would say, well, it's wise to book profit at these levels because stock is really run up and it's a perpendicular rise. So I would definitely say that yes, profit booking should not be ruled out because anytime if the stock topples, we can see a good corrective move. So yes, prudent to book profit at these levels.
All right. The next counter is Gland Pharma. Now, we have the question from Sanjay. They bought the counter at a price of 1,737 rupees. Just very close to what it's currently trading at. We have the con call as well for a Gland Pharma, and we'll look out for the management commentary on this one. But Lancelot, what's your sense of Gland Pharma, what it has done till now, and the outlook for the company?
So I think it's trading at almost 45 times its earnings, which is a high multiple for a pharma company. Yes, the company is showing some improvement in terms of the earnings going forward. But when you are going to pay 44 times, I think it's significantly higher than most of the other companies. So one should look at maybe staying away for the time being.
Okay. All right. Another pharma question. This one's from John from Bangalore. They have bought shares of Aurobindo Pharma at a price of 890 rupees. It's well above 1200 levels. From a short-term perspective, should you continue holding on to it or book profits, Vaishali?
Well, I think overall pharma sector is once again picking up, and talking about Oro, it's still in an uptrend. So I would say continue holding with the trailing stop loss. We can see a projected target coming to 1260 to 80. So I would say hold on with the trailing stop loss.
Got it. The next counter is this one's okay. The question is from Saurabh from Gurgaon. They're talking about Cyient. They bought the shares at a price of 1,750 rupees, and this is from a 1-year perspective. Lancelot, for a Cyient, would you suggest holding on to it? It's very, very, very close to what it's currently trading at, the buy price.
So I think one can hold on to this company because it is in an engineering space, and one can expect that this business is going to grow. Yes, valuations have come off because, like I said, the sentiment for technology stocks has been a bit negative, given the situation happening or unfolding in the global economy. But you're purchasing it at a 25 to 27 times the forward earnings. So it's pretty reasonable to hold on to it because you will see growth coming in as the scenario globally improves.
All right. Now, unfortunately, we're completely out of time on this edition of Ask Profit. Thank you so much, Lancelot and Vaishali, for joining in and for answering questions for us. And viewers, hope we were able to take your questions today. But if not, we'll definitely take them tomorrow. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
Well, good afternoon and welcome to Earning Edge right here at NDTV Profit. We're now discussing Action Construction Equipment on the back of strong Q4 results by the company. We're now joined by